Welcome back to our unemployment insurance series. I'm John, and in our last episode, we walked through filing your initial unemployment claim. Now you're probably wondering, when do I actually get paid, and what do I need to do to receive my benefits? Today we're covering the weekly certification and the payment process, the questions you'll answer each week, and how those answers directly impact whether you get paid and how much you receive. We'll cover work search requirements, how to report earnings and pensions correctly, able and available issues, and how school or training affects your benefits. Let's start with the fundamental relationship between certifications and payments. The adjudication of your reason for separation establishes your eligibility, and your monetary determination establishes your weekly benefit amount. We'll dive deep into the adjudication process and monetary calculations in later videos, but for now, here's what you need to know. Assuming your claim is approved and you've worked long enough and earned enough to become monetarily eligible for benefits, that approval doesn't mean money automatically shows up every week. Instead, you need to certify for each week or each 2-week period, depending on your state, to actually receive payment. Think of it this way: certification is you telling the state, yes, I was still unemployed this week, I met all the eligibility requirements, and here's what happened during the week. Only after you certify does the state release your payment for that week. Here's the typical cycle. The week ends, usually on Saturday. Your certification window opens, often on Sunday. You certify online, by phone, or through your state's app, answering questions about that previous week. The state processes your certification and calculates your payment. Payment is usually issued within 1 to 2 business days, but some states can take a bit longer. The questions you answer during certification aren't just formalities, they're the gatekeepers to your payment. Answer incorrectly or incompletely, and you could face payment delays, reductions, or denials. So let's break down each major topic you'll encounter. Once your certification is processed and approved, you need to actually receive your payment. States typically offer 3 methods, and choosing the right one can make a significant difference in how quickly you get your money. When you filed your claim, you likely selected a payment method, but many states will allow you to change your payment methods whenever you like. Personally, I recommend direct deposit, and here's why. Direct deposit is the fastest and most secure payment method. Once your certification is processed, payment typically appears in your bank account within 1 to 3 business days, sometimes even overnight. To set up direct deposit, you'll need to provide your bank routing number, usually 9 digits, your account number, whether it's a checking or savings account. You can usually set this up when you file your initial claim or add it later through your online account. Double-check your account numbers carefully. One wrong digit can delay your payment significantly while the state investigates and corrects the error. Most states allow you to change your direct deposit information, but there may be verification steps or processing delays when you make changes, so it's best to set it up correctly from the start. Many states issue unemployment debit cards, often through banking partners like Bank of America, U.S. Bank, or others. Your benefit payment is loaded onto this card, typically on the same timeline as direct deposit, within 1 to 3 business days after your certification is processed. Here's what you need to know about debit cards. The card usually arrives by mail within 7 to 10 business days after your claim is approved. You'll need to activate it before use, typically by calling a phone number or going online. You can use the card anywhere debit cards are accepted, to make purchases, pay bills online, or withdraw cash at ATMs. Most state programs offer free ATM withdrawals at certain ATM networks, but using out-of-network ATMs may incur fees. There's typically no fee for the first card, but replacement cards for lost or stolen cards may have a fee. Check your state's specific fee structure. One advantage of the debit card is that you don't need a bank account. This helps people who are unbanked or whose bank accounts may be frozen or have other issues. Don't throw this card away because states will often reload that same card rather than sending a new one. Many people return to UI a year later and the state loads funds onto the old card they shredded. Some states still offer paper checks, though this option is becoming less common. Checks are mailed to your address on file after your certification is processed. The timeline is much slower, typically 7 to 10 business days from certification to receiving your check in the mail. This includes processing time plus mail delivery time. Paper checks also carry risks. They can be lost or stolen in the mail. They can be delayed by postal service issues. You need to physically deposit or cash them, which may involve fees if you don't have a bank account. There's a longer gap if your check is lost and needs to be reissued. If your payment doesn't arrive within your state's normal processing time frame, first, check your online account for messages or issues. Make sure your certification actually processed. Sometimes people think they completed it, but the system didn't record it. Second, verify your payment information is correct. Check that your direct deposit account numbers are accurate or that your mailing address is current. Third, look for holds or pending issues on your claim. You might have an unresolved eligibility issue that's preventing payment release. If everything looks correct and you still haven't received payment, contact your state agency. Keep records of when you certified and confirmation numbers. Regardless of which payment method you choose, never share your debit card, PIN, or banking information with anyone claiming to be from the unemployment office. Monitor your payments regularly for any unauthorized transactions. Report lost or stolen debit cards immediately. Keep your mailing address and contact information up to date. Now let's talk about earnings. This is where accuracy is absolutely critical because misreporting earnings can result in overpayments, penalties, and even fraud charges. What earnings must you report? You must report all earnings from any work during the week, including wages from part-time or temporary jobs, self-employment income, freelance or gig work, Uber, DoorDash, freelance writing, odd jobs, commission income, tips and gratuities, cash payments for work performed. The rule is simple. If you performed work and received or will receive payment for it, you must report it. This confuses many people. You report earnings for the week you performed the work, not the week you received payment. For example, you worked Monday through Wednesday of week 1, earning $300. You don't get paid until Friday of week 2. When you certify for week 1, you report $300 in earnings, even though you haven't received the money yet. When you certify for week 2, you report 0 earnings for that week, even though you received your paycheck during that week. If you did gig work, even if you haven't transferred the money from the app to your bank yet, if the work is done, it is reportable earnings. Report your gross earnings. That's your pay before any taxes, insurance, or other deductions are taken out. If you work 20 hours at $15 per hour, you report $300, not the $230 you might actually receive after deductions. For self-employment, most states require that you report your gross income, not your profit after expenses. If you made $400 from freelance work but had $100 in expenses, you report $400. Every state's formula is different. Some disregard more, some less, but the principle is the same. Partial earnings result in partial benefits, which is designed to encourage part-time work while you search for full-time employment. Intentionally underreporting or failing to report earnings is considered fraud. States cross-reference unemployment payments with wage records from employers. They will discover unreported earnings, maybe not this week, but eventually. When they do, you'll face repayment of all overpaid benefits, potential criminal prosecution for fraud, penalties and interest on the overpayment amount if it was deemed fraudulent. It's never worth it. Always report accurately. One of the most common certification questions is about your work search activities, but here's what many people don't realize. Work search requirements aren't the same for everyone. If you're on a temporary layoff with a specific return to work date, meaning your employer told you we're bringing you back on March 15th, most states waive the work search requirement. You're expected to return to your job, so actively seeking other work doesn't make sense. However, if you don't have a definite return date, or if your employer said maybe in a few months, or when business picks up, you typically must conduct an active work search. States vary significantly in their requirements, but common acceptable activities include submitting job applications online or in person, attending job interviews, contacting employers directly about openings, attending job fairs or recruitment events, working with employment agencies or recruiters, taking job-related assessments or tests. Most states require a specific number of work search contacts per week, often between 2 and 5. Check your state's requirements carefully because this number can make or break your payment. During certification, you'll typically need to provide the number of work search activities you completed. For each contact, the employer name, contact date, method of contact, and sometimes the position you applied for. Keep detailed records as you go. Don't try to remember everything when you certify. Many people use spreadsheets or notebooks to track their job search activities. Here's the critical point. If your state requires 3 work search contacts and you only completed 2, you will likely be denied payment for that entire week, even if you had no earnings and met all other requirements. Work search failures are one of the most common reasons for payment denials. If you're unsure whether work search applies to you, check your state's instructions or contact them directly. It's better to do unnecessary work searches than to lose a week's payment. One of the most important requirements for unemployment benefits is that you're able to work and available for work. What does able to work mean? You must be physically and mentally capable of performing work. During certification, you'll typically be asked, were you able to work each day of the week? If you were sick or injured and couldn't work, you need to answer truthfully. Depending on your state and how many days you were unable to work, you might receive no payment for that week, receive a prorated payment for the days you were able to work, need to provide medical documentation. Short-term illness, a day or two, might not affect payment in some states, but a full week of being unable to work typically results in no payment. What does available for work mean? Available means you're ready and willing to accept suitable work immediately. You're not imposing restrictions that would prevent you from working. Common availability issues include being out of town on vacation. If you're not in your labor market area and couldn't start a job immediately, you're not available. Restricting your availability to only certain hours or days beyond what's reasonable for your occupation. Having transportation or childcare issues that prevent you from accepting work. Being enrolled in school full-time with a schedule that limits your availability. You must answer these honestly. If you weren't available for part of the week, maybe you were out of town for 3 days, report this. Some states will prorate your payment, others might deny the entire week. This is where many people accidentally overstate a problem and create bigger issues than necessary. Let me give you a really important example because this trips a lot of people up. There's a big difference between saying, my car broke down today, and saying, I have no way to get to any job. If your car broke down one day, that's usually a temporary issue. You may still be considered able and available for work overall, especially if it's being repaired or you have other options. But if you say you have no way to get to any job at all, that tells the state you're not currently available for work, and that can pause your benefits until the situation changes. The system isn't looking to punish you for a bad day. It's looking to understand whether you're generally able to work and realistically available for employment. When answering availability questions, think overall for the week, not worst moment of the week. Some situations that would normally make you unavailable might be approved by the state. Jury duty, attending a family funeral. Emergency situations. You typically need to report these and may need to provide documentation, but they might not affect your payment if properly reported and approved. Answering that you weren't able or available for work can result in full denial of that week's payment, a partial payment if your state prorates, a hold on your claim while the issue is investigated, a requirement to provide additional information or documentation. The key is honesty. Don't certify that you were available if you weren't. That can create overpayments and fraud issues, and states do investigate these situations, especially when patterns emerge. Pension income is another area that frequently causes confusion and payment issues. What pensions affect unemployment? If you're receiving pension payments from a former employer, these may reduce your unemployment benefits. The key factors are whether you contributed to the pension yourself or if it was entirely employer-funded, whether the pension is from a base period employer, an employer you work for during the time period used to establish your claim, your state's specific pension rules. Employer pensions or retirement payments typically affect your benefits. This includes defined benefit pensions, some 401k distributions, and retirement annuities. Social Security retirement benefits may or may not affect your unemployment benefits depending on your state. Some states reduce unemployment for Social Security, others don't. Disability pensions often do affect unemployment benefits, and in some cases may disqualify you entirely if you're not able to work. During certification, you'll be asked if you're receiving pension payments. You'll typically need to report the gross amount you receive, how frequently you receive it, weekly, monthly, etc., which employer the pension is from. If that employer contributed to the pension, the state will calculate how this affects your weekly benefit amount. The reduction formula varies by state, but commonly the pension amount is prorated to a weekly amount and then either fully or partially deducted from your benefits. Failing to report pension income is another form of overpayment. States have various means to discover unreported pensions. When they do, they'll establish an overpayment and require repayment, often going back many months. If you're unsure whether your pension affects your benefits, report it and let the state make the determination. It's always better to over-disclose than to under-disclose. Attending school or training programs while receiving unemployment benefits is a complex area that frequently affects payments. The basic rule: remember that you must be available for work. If attending school restricts your availability, meaning you couldn't accept full-time work in your field because of your class schedule, you may be ineligible for benefits during that time. Full-time enrollment in school or training typically creates an availability issue. If you're taking classes during normal business hours and couldn't accept a full-time job because of your schedule, most states will deny benefits. Evening or online courses that don't restrict your daytime availability generally don't create issues, but you still need to report them during certification. Here's the important exception. If you're enrolled in a state-approved training program, you can attend training full-time and still receive unemployment benefits without needing to conduct work searches or prove availability for other work. Approved training programs are typically approved by your state's workforce development agency, related to in-demand occupations in your area, full-time vocational or technical training. Sometimes include certain college degree programs. To participate in approved training while on unemployment, you usually need to apply for approval before starting the program, receive written approval from the state, make satisfactory progress in the training, report your training status during weekly certification. During certification, you'll typically be asked, are you attending school or training? Is it full-time or part-time? Is it state-approved training? Does it interfere with your availability for work? Answer these questions accurately. If you're in approved training, make sure you have your approval documentation and reference it when certifying. Improperly attending school while on unemployment can result in denial of benefits for all weeks you were attending, an availability disqualification, overpayments if you received benefits while ineligible, fraud penalties if you didn't report your attendance. If you're attending approved training, your benefits continue as normal. Work search requirements are typically waived. You maintain full eligibility as long as you're making satisfactory progress. In some cases, the state's workforce division will pay for your training. Talk to your state's workforce division first to explore this possibility. We will have another video about this topic soon. If you're considering enrolling in school or training while receiving unemployment, first, contact your state unemployment agency before enrolling. Ask about whether the program qualifies for approved training, how to apply for training approval, whether it will affect your benefits. Second, if the training qualifies, complete the approval process and get written confirmation before starting classes. Third, don't enroll in school that would restrict your availability without approval, as this will likely disqualify you from benefits. Now that we've covered what you'll report, let's talk about when and how to certify. Most states offer online certification through their website or mobile app. This is the fastest method and usually results in the quickest payment processing. Automated phone systems are another option. Paper forms are the slowest and can delay your payments significantly. Each state sets specific certification windows. You might be able to certify starting Sunday morning for the previous week, with the window open for several days. Critical timing rule: most states have a firm deadline, often 14 to 28 days after the weekends. Miss that deadline, and you could permanently lose that week's payment. Some states are strict about this. There's no going back. The sooner you certify within your window, the sooner you get paid. If you certify Sunday morning, you might see payment by Monday or Tuesday. Wait until Thursday, and payment might not process until the following week. Here's my practical advice for staying out of trouble. Maintain records of every work search contact with dates and details, all earnings with pay stubs or records, pension statements, any days you weren't able or available with reasons, school enrollment and approval documentation, confirmation numbers from each certification. Before clicking Submit, review your answers. Make sure all earnings are reported accurately. Work search contacts are complete and accurate. You've honestly answered able and available questions. You've disclosed any school attendance. Pension income is correctly reported. Check your payment history regularly. If a payment is missing or incorrect, investigate immediately. Look for messages or alerts in your online account. If you're unsure whether something needs to be reported, report it. Let the state determine if it affects your benefits. It's always better to over-disclose than to create an overpayment situation. Weekly certification is your ongoing responsibility throughout your unemployment claim, and the accuracy of your certifications directly determines whether you get paid and how much you receive. The 5 topics we covered today: work search requirements, earnings reporting, pension income, able and available status, and school or training attendance, are the most common areas where people run into payment problems. Understanding these requirements and reporting accurately will keep your benefits flowing smoothly. In our next episode, we'll dive deeper into how your benefits are calculated, called monetary determinations. Subsequently, we will talk about adjudication, which is the ultimate decision-making process on issues, the things like the reason you separated from your employer that can cause your claim to be denied. If this helped clarify the certification process, please subscribe and hit that notification bell. Drop your questions in the comments, especially about state-specific requirements or situations we didn't cover. Thanks for watching, and I'll see you in the next episode.